And for Commodities Market Update now, we have Bolanle Agbaje joining us now, Senior Analyst at FTC. Good morning. Good to have you.
Great to have you.
So we got that hot GDP number for Q4 yesterday. Was it in line with your expectations?
Yes, it was, in the sense that we know that the trend is in Q4, usually because of increased business activity during that period. We do expect that GDP numbers are usually higher, but we didn't do as well as what we did in 2021, given the challenges that we faced throughout the year. And obviously, the full year figures of 3.1% also declined compared to 2021, just because of all the crisis that we had faced. And obviously, we started recovering from COVID, in 2021, and then this stopped or halted because of the Ukraine crisis and how it affected all aspects of the world economy. So the numbers are great in the sense that non-oil sector obviously contributed even more towards GDP, which is what we've been asking for. The oil sector, as we expected, just because I think our production ramped up to about 1.3 million barrels per day during that period, and obviously we didn't reap the benefits of increased oil activity in that particular quarter. But all in all, it's great news, although the only sad part about it is the fact that agriculture obviously contributed way less. I think in Q3 it contributed about 27%, and right now it had dropped. In Q4 it had dropped to about 23% in contribution to GDP, and that's not necessarily great, because going forward we do expect that there's more performance or increased performance in the agricultural sector, and obviously that's hopefully translates into increased funds in the economy when it comes to our reserves. So even though we had seen non-oil sector contribute way more towards GDP, you're not seeing that translate into the amount of money coming into the country in terms of export funding and all of that. So hopefully going forward we change this, although when you're talking about Q1 numbers, it seems like we're going back.
Normally, historically, Q1 is normally slow.
Yes, it's normally slow, but so it seems like with all the crisis, the cash crisis and the disruption in the economy would obviously reduce this particular growth numbers even more, and we wouldn't be surprised if the growth numbers falls below 3% in Q1.
Well, we're looking out for that for sure. But let's look at other matters now in the commodities market, and globally. Obviously, the drums of recession
is
are already raging, but it seems to be slowing down.
It seems to be slowing down. So the Wall Street Journal released a report, and the report generally was a bit optimistic, and in the sense that they had interviewed some of the business people in the UK, in the US, and they realized that consumer confidence and business confidence is building up generally, although they're seeing risk of significant wage pressure, and that just speaks to the wage spiral effect, in the sense that when you have a situation where prices are higher, people in the economy obviously demand more wages, and once you get that, they spend more, and the cycle continues. So it's that wage spiral effect they're trying to also break down in terms of increasing interest rates. But also, once that happens, you see increasing borrowing costs in the economy as well. But generally speaking, they're seeing the recession fears easing out in the UK, US, and some other parts of the world economy as well. And so it's great news for us. It seems like what central banks in some of those countries are doing, what the government in some of those countries are doing, is actually paying off, and it's working. Obviously, we don't expect that those economies go back to pre-COVID levels, but they're doing way better than what they had done at the start of 2022 in particular, because it was a peculiar year.
Back here too, recession fears don't.
Well, given the GDP numbers, it seems like we're still a bit far from those recession fears. But going forward, it would just be nice to see. It's quite great that the election is already here, so we can definitely put that behind us. Once it happens, and then we move on back to business, crunch time, getting our economy where it's supposed to be.
Yeah, everyone's definitely waiting for that countdown, so we can just put it behind us at this point. All right, let's look at the oil market now. We see Russia's announcement of a deeper supply cut. That seems to have added some
pressure,
some price action there.
Yes.
For Brent.
So obviously, I'm sure it's affecting them significantly with whatever is happening now in terms of the fact that people are not obviously buying as much from them, and the price cap and all of that, the sanctions. So I'm sure they're trying to make sure that they have an impact on the price, and in actual effect, it translates into, or it starts affecting some of these economies that have imposed sanctions on them. But the good news for us in Nigeria, because that's what we do care about, is the fact that we can actually benefit from this. I saw that the NNPC released a report saying that oil production has increased to about 1.6 million barrels per day.
Almost nearing that 1.8.
If that's true, it's great for us, so we can actually benefit from this. And we put behind all those oil theft, oil vandalism, security issues. I know most all the candidates that are competing for this election, they've in all their mandates, it states security is a major challenge for them. And so whoever becomes the next president, we're hopeful that the security issue is tackled significantly.
Optimistic at this point. Well, let's look at wheat now. We see wheat prices coming down in the global market. That's good for us. We import wheat. Yes,
it's good for us, but it's still not where it's supposed to be. Wheat price currently at about $758 per bushel. Obviously, the reason why we're seeing that slowdown in the price is the fact that India had already increased production. But going forward, we do hope that the trajectory for wheat prices and corn as well, declines, and as net importers of those particular commodities, we can benefit from the reduction in price.
And what's happening with domestic commodities market now? We know people were talking about stocking up before the election. How's that
so
impacting
the good
price?
thing is prices have tapered down marginally, because we're still in the harvest season, but it's still at record highs compared to previous years. But right now prices are either they have either remained flat or declined marginally. So that's great for us. And I'm sure because of the cash crisis, that's also affecting sales of some of these domestic commodities. So it translates into lower prices in this particular period. So it's right now, generally, averagely, domestic
because
prices.
Because even if demand, is trying to rise, there's still that issue of cash.
There's still that issue of cash. And yesterday, in particular, we had serious, issues with network when it comes to, moving money around digitally. And that obviously has affected sales, and I'm sure those are still the challenges that some of these marketers are facing in terms of domestic commodities.
All right, let's look at the currency market now. We see the Naira there is trading flat. Even though we're just so
like I mentioned, the demand for dollar is there, but it's not as significant as the impact on the cash crunch that we're seeing. So it's like a push and pull factor. On one hand, you're seeing the increase in demand for dollar, or most people want to save their money in dollars, but the fact that there's no Naira in the market is pulling the effect or the impact that you would have had on the exchange rates, Naira exchange rate. So that's the reason why you're not seeing a significant depreciation of our currency.
All right, let's look towards next week. What are we expecting for global commodity prices?
So next week is very uncertain, just because nobody knows how the election period would go. Although I'm seeing signs that they've deployed the army, I think, to make sure that the election is safe, and so we do hope that it follows that same path. And if it does, it means that from next week onwards, most banks would get back into business and make sure that whatever is happening in terms of this cash crisis can smoothen out and they can go by their day as usual. So what happens from next week is just trying to get the economy to stay afloat.
And right here, we've been, begging Nigerians to stop, attacking the banks, stop, attacking their ATMs and all of that. We know it's quite frustrating, but at the end of the day, we're still going to move on.
Exactly.
And they still need to have all of that.
You can't really blame them. Some of them are, really struggling. Poverty is really
it's
intense.
Tough.
Yeah. So some of them are just reacting based on how they feel. And it's just sad that that's the reaction that we're seeing. And there's not much being done in terms of, cooling the tension in the market.
quite tough, because I'm also looking for cash.
The only thing right now is I'm hoping that the elections go well and go as planned, and then from next week we just move on. Yes.
All right. Thank you so much, Bolale Agbaje, Senior Analyst, Financial Derivatives Company.
Thank you for having me.
All right, we'll take a moment now.